Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, we've actually noticed the fifth straight day of losses for the Nifty. In fact, as of yesterday, the Nifty has ended at over 4-month lows for the second straight session in a row as well. In fact, these 5 days of losses have actually led to an erosion of 20 lakh crore rupees in investors' wealth. It has also sent the Nifty into a correction territory, which means that it has slipped 10% from the all-time high levels as well. Remember, yesterday the Nifty did slip below that 23,650 mark as well. We've also seen crucial levels closer to 23,500 being seen on an intraday basis as well. And finally, we did see the Nifty shut shop about 320 points lower at 23,559 as well. Remember, today will be the last day of trade for this week. It's a truncated week. Tomorrow will be a holiday on account of Guru Nanak Jayanti. And of course, we will also be looking at the next week, which will again be a truncated one. And also, it is the last day of earnings largely as well. So all the cues will be shifting on macros, on global cues, the FII flows, as well as the domestic electoral front as well. Maharashtra will be going to polls and therefore the action will be heating up as far as state political action is concerned. Good morning, Shail.
Good morning, ladies and gentlemen. Let me first start with the good news. Today is Children's Day, and may the child in us always remain alive and enjoy every part of this wonderful lesson that the market is giving to us at a cost of 20 lakh crore rupees, where we always keep valuations paramount rather than momentum. This is the biggest gift that the market has given us on Children's Day. And secondly, today is the last day of the week. Tomorrow is a holiday. There is an extended weekend, and we also have the weekly expiry of the Nifty, as also the Sensex 50, because Sensex 50 expires on Friday, and therefore it's been pulled a day in advance. Apart from that, ladies and gentlemen, I have nothing much to share on the positive side of the market. Yes, we did test the 200-day DMA yesterday, and there was a minor bounce. Most likely this bounce will continue in the first 45, 15, 30 minutes of trade for two reasons. Yesterday we lost 324 points on the Nifty. Day before we lost 257 points on the Nifty. Together 600 point fall in 2 days. This short covering will happen for all these people to book profit, because we don't know what will happen on the weekend, as also Friday, which is a holiday only for us. And therefore it is always good to book profit and move it to your bank rather than let it be alive. Next week also we have a holiday because Maharashtra goes to polls. Therefore, ladies and gentlemen, a short covering is expected in today's trade. But otherwise, all cues that you can think of, I'll request the PCR to fire the chart of the dollar index. Is very, very difficult for the markets to navigate. At 106.57, the dollar index is now at its highest in the last 13 months. And that, ladies and gentlemen, is a very difficult thing to do. Sakshi will tell you that the FIIs have been net sellers for the 33rd session in a row. The number will come for her. But overseas cues are absolutely flat, and we will see some kind of a short covering despite the US 10-year yield, despite the dollar index being completely against local bulls on Dalal Street. Inflation in India is at a 14-month high. Therefore, you see a lot of private sector bank charts cracking, and cracking badly. Look at Axis Bank, it is now below its 200-day moving average, and that's a bit of a worrisome point. As also the fact that now very, very heavy call writing is seen on 23,700, 23,800, 23,900. All these bears who are sitting on higher levels of the Nifty are refusing to let it move, as also other sloping moving averages trending lower. Apart from that, you have net short contracts to the extent of 2,12,000 crore rupees, 2,12,000 net short contracts on the Nifty by foreign funds. So there's no chance that you might see a dead cat bounce continuing. The Nifty will rise maybe for 100, 200 points and then again come under selling pressure. The best strategy, ladies and gentlemen, is again the SBI Nifty ETF. If you are keen to participate on the long side of the market for the coming 2 years, 3 years or so, this is an opportunity that you should look at. The SBI Nifty ETF is a mirror image of the Nifty, and you should buy the Nifty in crisis. It is the lowest cost fund that you can buy in terms of expense ratios within the ETFs, extremely liquid. Please keep an eye out on this. I am personally buying it as well, and buying it in piecemeal, and this should be doing a whole lot of good to us in the next 3, 4, 5 months or so. But extremely cautious trade is advised on the long side. And Sakshi, one more thing, as weekly expiries are coming to an end, especially on the Bank Nifty, on the Fin Nifty, on Mid Cap Select and Sensex 50, 45 new stocks will make an entry into the FNO space to fill up that vacuum, and all the names that we were hoping for are there. DMart and Geo Finance to begin with, as also CDSL and BSC from the wealth management side, including Angel One. We also have a whole host of new age stocks such as Paytm, Delivery, as also PB Fintech being a part of this 45 stock group. So all put together at this point of time, we have about 184 stock futures traded, and another 45 will add to Sakshi and my workload from 29th November. So happy trading and happy investing in this kind of an environment. Sakshi, what are our foreign funds doing, and what is the close that has come in from Wall Street?
We did see that it was a quiet day on the Wall Street as well. We have seen that on Wednesday, Dow Jones ended about just 0.1% higher at 43,958. S&P 500 ended just about 0.02% higher. The Nasdaq Composite ended 0.2% down at 19,230 odd level. So mixed close is what we have seen. Remember, the CPI numbers for the US have come in line of expectations, and following that, most of the Asia Pacific region has also been trading with a positive bias as of Thursday morning, because we expect the headline inflation, which is fueled bets that US Federal Reserve could actually go ahead for another rate cut in December, and that's keeping the sentiments elevated across the Asian markets. The Nikkei was trading about 0.8% higher in trade at 39,316. What we have seen is that the Kospi also was looking up by about 0.25% higher in trade. The Hang Seng although slipped by about 1%, and the SSE China also about 0.5% lower in trade. As far as the GIFT Nifty trends are indicative that we could be looking at a muted opening at 23,622, down about just 0.02% in trade. As far as the overseas investors are concerned, of course, they remained net sellers for the 33rd consecutive session, while the domestic institutional investors stayed net buyers for 8th straight session. The FPIs of floated stocks worth about 2,502 odd crores, while the DIIs bought stocks worth about 6,145 odd crore rupees. Despite this heavy buying, we actually saw what unfolded on the D Street yesterday as well. Of course, a large part of this comes in from the domestic mutual funds too, so keep an eye out on that. Several stocks have been mentioned by Shail that will be important for us to track because they get added in FNO, so keep an eye out on those stocks. Several other stocks that you should be looking at in terms of news flows. Cipla will be in focus. US FDA has issued 8 observations to the company's Bengaluru manufacturing facility. There could be some kind of a minor reaction there. 1.2% lower is what it closed at yesterday. Varun Beverages will be in focus. It has approved a floor price for the qualified institutional placement at 594.5 rupees per share. So we'll keep an eye out on that one too. Earnings front, Eicher Motors came out with the earnings revenue up 3.6% at 4,263 crores. What we've seen is that the EBITDA came in at 1,088 odd crore rupees as well. This is largely flat. EBITDA margins were down by about 90 basis points at 25.5%. The net profit improved by about 8% at 1,100 crore rupees for the company. From the pharma pack, AstraZeneca Pharma came out with the numbers. Revenue improved by 31% at 408 crores. EBITDA improved substantially by 56% at 52.3 crores. We've also seen the net profit, however, slip down 27% nearly to 38 odd crore rupees. This is despite the margins improving by 204 basis points. So a mixed kind of an earnings coming in from AstraZeneca. RCF will be in focus here. The revenue improved by 3.2% at 4,290 crores. EBITDA substantially higher, 90% higher, 201 crores. Margins also doubled nearly, 4.7% versus 2.5% earlier. The net profit was up 54.7% at 79 odd crore rupees. Good set of numbers coming in for that one. We look at Godrej Industries. Here the revenue was up 22% at 4,800 crores. EBITDA at 575 crores, again near doubling from 266 odd crore rupees last year same quarter. Margins came in at 12% versus 6.7%, substantial improvement, and the net profit came in at 489 crores versus 165 crores, substantial and very good solid set of numbers coming in from Godrej Industries. Vodafone Idea, sequential basis, we've seen the revenue up by about 4% at 10,932 crores. EBITDA improved by 8.2% at 4,550 crores. Margins came in at 41.6% versus 40%. The net loss also came in at 7,176 odd crore rupees. This was a reduction on a year-on-year basis for sure. We'll keep an eye out on Nalco. The state-owned company reported a 415% year-on-year jump in the net profit at 1,062 crores. And we've also seen that the company has mentioned the revenue from operations surging about 31.5% at 4,001 odd crore rupees as well. Good set of numbers from this one. We'll also look at how a new listing will shape up, and that is for Niva Bupa Health Insurance, which will debut on the D Street today. Remember, it had an issue price of 74 rupees. This 2,200 crore rupees IPO was subscribed 1.8 times on the final day. So these are the kind of stocks that we can keep an eye out on today, Shail.
Ladies and gentlemen, today is the last day of what has been a disastrous second quarter earnings, and we are following 5 for you, 2 from the Nifty. Hero Motors, in the month of November alone, Hero Motors has slipped 9.5% in trade at 45.34. We also have earnings coming in from Aditya Birla Group's diversified flagship, Grasim Limited. The counters lost 7.6% in trade, and apart from that, within the pharma space, you have Glenmark and you have Ipca Labs reporting earnings in the F&O space. Glenmark is down 9.2% in the month of November so far. This has been a stock that has seen record highs, and profit booking has assailed it at that levels. Ipca Lab again consolidating near record highs, lost 5.2% so far in the month of November F&O. Apart from that, Muthoot Finance and you also have Bharat Forge reporting their second quarter earnings. Bharat Forge is down 6.8% in the expiry that continues, and when you see Muthoot Finance, this has been down about 8.5% in the previous 10-11 sessions that have lapsed in the F&O expiry. So these are the 5 stocks at least that I am looking at. What else is also interesting? Numbers that Sakshi's pointed out, in particular Nalco. Record set of data that has come in, and the stock should react positively given that it's fallen for the past 5 sessions in a row, and at 219, given the numbers that have come in fact the numbers were very good as far as profit is concerned. Let's just revisit them. One second. Okay, I'll get those numbers a little later, but this is something that needs to be watched at, and we will also keep an eye out on stocks such as Infosys and stocks such as L&T Mindtree. They've provided a lot of support to the market, in particular the Nifty as far as IT is concerned. This is the only pocket, Sakshi, that's left in gains as far as the Nifty is concerned. All 45 out of 50 stocks on the Nifty, there are just 5 in the tech space that are up on a monthly basis, and they are Infosys, HCL Tech, TCS, Tech Mahindra and Wipro, to some extent Maruti, but all the rest 44 are down anywhere between 10% to 2.5%. So that's the state of play. We are waiting for Devin Bhai to join us. Mr. Devin Choksi, MD at DR Choksi, FinServ Private Limited. Namaste Devin Bhai, and a very warm welcome to you, sir. Is the worst over on Dalal Street? I see this lovely smile that you have. Are you thinking of buying at 200-day DMA, or is more pain in the offing as far as you are concerned, sir? It's so good to see you smiling.
Thank you, Shail. Good morning. Good morning to you and Sakshi both. Keep smiling, because I think that is at least one thing which will stay with you. Rest of the things will definitely, I think, come and go. That's not our worry. Well, I guess I think we have had a decent and sharp correction in the market. Generally, this morning I was talking to some of our clients, and I think next time I remarked, and I said that when market goes up, it takes time to go up. When it comes down, I think it doesn't take time to come down. I think it just simply gets pushed from the cliff, and it is thereafter, I think the fall is certain. I think to a greater extent, almost about a 3,000 point fall in Nifty that we have seen. I guess I think we are done, probably. And maybe I think there is some small pain left at this point of time. One can't be very sure, but small pain is definitely there. And this pain also, I realize that I think is also coming from those people who have been holding the stocks on the leverage positions, be it in the derivative market or be it in the cash market. I think they've been holding the stocks on leverage position, and that is actually, I think, adding to this particular fall. I don't think that the serious investors are selling anything at this point of time. On the contrary, my understanding is that most of the long-term investors, they've been buying in every fall, and that's what I think one should be doing. So in my viewpoint, selective fundamentals companies one should be adding into the portfolio. The reason for the smile to a certain extent, like I may add to it in a little lighter way, people have seen second quarter results and they made the judgment out of second quarter results. Probably I think they have missed out completely that the festive season happened in the third quarter. They are missing out completely that in the third quarter you are having highest ever GST collection. We are having highest ever SIP collection in mutual funds. We are having highest ever insurance collection, which normally happens in January to March quarter. We are having highest ever insurance premium collection, provident fund collection. So in my viewpoint, I think this is a positive. Second positive that people are building a narrative on, which is I think a negative narrative, that is the FMCG companies are not finding the urban consumption. But friends, we are forgetting one thing, that in urban consumption, the complete habit has changed. We have moved to quick commerce. It was a time when probably we used to go to store and buy 1 liter tin for our house care kind of a chemical that would, say fluorine chemical that is required, I think, to clean the floor, etc. Today, I think we are not buying 1 liter tea. We are buying, I think, few milliliter teas, I think, which is basically available through the e-commerce company. And that's the reason for which I think this particular consumption level has come down. I don't think that this is permanent. Probably, I think what we are going to see is a change in habit. We are getting used to, I think, the instant buy and small packages. So that is the reality. That is where probably you are seeing a shift. But eventually, I think you are going to see the consumption remaining in parity with the economic growth. So all in all put together, summarizing some part, third quarter, fourth quarter, distinctly looking promising. Automobile has had a decent sale in the month of October. Also clearing the past inventory. Coming January, February, March, Maruti, Toyota kind of companies are coming up the new range of vehicle, and so would be other companies. So in my viewpoint, I think things are turning around for better. So I think that is where probably I think my confidence is higher, that this is a time when probably one could look at the market selectively and add the stock in the portfolio, because recent corrections have happened in the valuation. And that is also another reality.
Okay. Devin sir, last day of the earnings season, I wanted to just get a sense on do you really believe the earnings misses will probably bottom out with Q2 getting over, or do you further see EPS cuts coming in even in Q3 as well? Should we be bracing for some more pain to come in for the large part of earnings phase even in Q3, or do you think festive demand will balance out something?
Yeah, good morning, Sakshi. Well, I believe that I think most of the analysts, I think without being critical on them, most of the analysts, I think, have been, I think, Excel sheet analysts. They have been, I think, looking at the Excel sheet way of working for every quarter to quarter, forgetting few things that I think in the last quarter, we have had a delayed session, the delayed season. June month, I think we complete the election. July, we had the budget, and the spending of the government actually is happening post monsoon. So we are forgetting few things that I think industry is working cannot be better when you have events like election and the budget happening 4, 5 months later than what normally otherwise it should be. So from that perspective, I think we are seeing the pain in the second quarter, no doubt. But avoid using the Excel sheet beyond the point, as that is what my viewpoint here would be. Fundamentals of the companies and the economy, they remain absolutely robust. One should have that confidence that I think these fundamentals are not going to go away from what we have enjoyed and what we are expecting. So from a perspective of looking at the opportunity, respective companies are showing the signs of higher growth in the third and the fourth quarter. Maybe not as much as I think what we have seen in the previous 2 years, because in previous 2 years, as I mentioned earlier, we are having a situation of lower base. Today we are having a situation of higher base. But on a higher base, with economic growth in parity, probably I think we are likely to see reasonably good earnings coming from the companies in subsequent quarters as well.
Okay. Devin bhai, this inflation data that came day before yesterday at 6.1 has sort of dashed all hopes of a rate cut by the RBI 2, 3, 4 months down the line. Do you think private and public sector banks still will continue to be on buyers' radar? This plus IT were the only two hopes, perhaps pharma as well, on which bulls were skating on thin ice. And taking away private banking, public banking is also a short-term negative for the market.
So, Shail, I think being a student of economics, I always look at the data with a particular lens. I find that if the food inflation is higher, there is a reason. You have a shift in the season. Your monsoon has prolonged. If your onions are costing 100 rupees to a kg, your monsoon is prolonged. Your all cultivations of our horticulture is also pushed to I think October and November as against August and September. So let's understand one thing, that the inflation is on the higher side because of this reason. Now, if it is on a higher side because of this reason, and if it promises to I think go down because of the better reason, that is the cultivation is now taking place, it is a choice that RBI will have to exercise, whether they want to see the food inflation coming down after they want to bring down the rate, or they want to bring down the rate in anticipation of food inflation coming down. I would think that it is better that you bring down the rate in anticipation of food inflation coming down, because it's a reality. You have got the reality in place. And because of the fact that I think if you bring down the inflation rate of interest, you are actually helping the economy for consumption. If the consumption increases, I think all other factors I think would turn positive, including the prices. So I think it's a call which RBI has to take. If they don't take a call in December, they'll take a call in January, February. I don't worry about it. I think as the seasons are getting shifted 1 month, 2 months, let RBI season also get shifted, I think, by 1 or 2 months. Doesn't matter at all.
Okay, Devin sir, do tell us, how have you assessed the day one performance of Swiggy on the D Street? And what is baffling investors is that brokerage houses are coming with these varied targets on both Zomato and Swiggy on the day that Swiggy was getting listed. They expect competition to increase, and therefore there are 50% downside targets coming in for Zomato, despite the fact that it's been one of the best performers in this year so far, proving their profitability. Swiggy, there was a large part of expectation that listing will be muted, listing day gains will be muted, but it ended up 20% higher on a day when the markets were falling like 9 pins. Could you help us assess what's really happening here?
Sakshi, you want me to elaborate or you want me to give a short answer?
Elaborate, please.
Okay, so I think those people who bought Swiggy in the
मिलिंद
public
भाई आपकी बात सुन
issue.
के हमें बहुत अच्छा लगता है.
Well, I think those who bought Swiggy in the public market, I think they have all the business to support their investment. They would not like their NAV to quote at negative level. For sure, I think they are putting more money into the market on the listing day so that the stock price gets supported. Whether it is justified to get at a higher price, I think this is a big question. We can debate it out as well. On the fundamental side, I'm a firm believer of consumer tech companies, and I believe that I think these companies have a really good business model to talk about. However, everything is good when it is priced good. Currently at 85, 90,000 crore IPO price, I think in the valuation, you are making a loss of 2,500 crore, and I think you want to make further loss or you want to burn further money. That does not give me confidence at all. I think I would rather wait for some time till the time I think they would probably make decent money on a sustainable basis. Currently, the business is basically shifting from one vertical to another vertical. If the food delivery business was a business, I think that business probably I think they started charging the fees, and now they are seeing the competition out there. So I think the fee part is coming down. So another vertical is coming out. Say dining out vertical is coming up. The third vertical will be coming up. I think already Zomato has I think few more verticals which they have added. So they keep on increasing the hook because if the earlier verticals are facing competition, they are getting commoditized. Businesses are not doing that great, and you are still giving them a valuation which is far more fancy valuation. I have seen in the past that I think for 10 years, companies have not performed the portfolios, customers' portfolio when you are buying them at a fancy valuation. So I think one will have to be extremely mindful about I think what price you are paying. There are plenty of good opportunities available, and that's where probably I think my eyes and focus should be because my client would want those opportunities ahead of the momentum driven and the fancy opportunities that we are talking about.
Right, ladies and gentlemen, let's look at the pre-open rates. The Nifty is starting on a backward, 100 points down, 90 points down now, 23,470. So the index begins a fresh life below the 200-day moving average, and the correction that we have seen for 10 percentage points on the Nifty now gets extended. Let us hope that sane sense will prevail. This is also the weekly expiry day of the index. In the last two sessions alone, we've lost 600 points, and in the week, that is in the past 5 trading sessions, about 2.5% of Nifty has been taken off by the bears. Okay, let's look at index heavyweights. We have Reliance down 0.5%, 1245. We have HDFC Bank flat at 1680. Infosys is down 0.2%, 1865. We have ICICI Bank down 1.9%, 1230. Axis Bank is down 1.1%, 1126. So this is, ladies and gentlemen, not looking good at the very start. We also have gainers in the form of M&M, 2.9% higher. A strong move coming in on Dr. Reddy's, 2% higher. Adani Ports, there was a good research report coming out yesterday from Motilal Oswal Securities with a target of about 1800. The counters now somewhere like 1300 rupees. What else is in the green? So tech is in the green. HCL Tech, Tech Mahindra posting modest gains. Aisha Motors post a strong set of earnings, 0.025% higher. Let's shift focus to NSE 500. What are the stocks? Okay, National Aluminium, as I had pointed out, 10 percentage points higher, 241. Remember, this is an F&O stock, so the first circuit on either direction is 10%. Idea Cellular flat, although terrible earnings. Garden Reach, a very strong set of numbers, 4% higher, 1440. And of course, you have favorites like Chambal Fertilizer, KPIL, ITI Limited, also up in the green. What is our favorite stock since yesterday? Swiggy doing? I'll give that an update to you, but Zomato is in the green. Let's look at that as well. So a fairly open and a kind of decent opening. 93, 94 down, 23,446. This is the lowest since we've seen from 12th June onwards. A new life begins on the Nifty below 200 DMA. Devin bhai, the new entrants that are coming in on the FNO space, how do you see them, and is this again an attempt of bringing valuations lower? I mean, for instance, many of these stocks, and I don't want to take any names, are still at very, very high PE. Earlier they could not be sold because you could short them, but now the opportunity is there. And we also have an example. Whirlpool came into FNO at 2,900 rupees, exited at 1,200 rupees. How do you see this change in strategy for both exchanges?
Absolutely, Shail, you are spot on. I think the premium valuation days for those companies which stayed out of FNO, I think are over. Moment I think they entered into the FNO market, the market is a leveler. They will probably see the valuations getting adjusted to their earning and earning growth. And that's where probably I think some of the expensive valuations, fancy valuation companies which have entered into FNO market will sooner than later find themselves getting into the premium valuation even down. Good sign in a way, because I think the investors who have otherwise been deprived of buying those companies because of the expensive valuation, they'll not get a chance to buy these companies at a reasonably decent valuation if the market gets corrected, which I believe it will. So from that point of view, it's a good thing that will happen at the same time. But more important issue out here in the FNO market is that the change in the regulations that the regulator has done. To me, I think this regulation, as it reads, they are more of a speed breaker. So on an expressway, I think we have ended up putting too many speed breakers. We are forgetting one thing, that the derivative market is for creating the liquidity. We are forgetting one thing, that the derivative market is for giving advantage on the to the investors by way of creating the liquidity so that the valuations, expensive valuations also get corrected and market become fair value. That part is an important part. By putting in the speed breaker and by preventing people to enter into derivative market is not a right approach. On the contrary, I think if you are very serious and committed about promoting the derivative market by way of adding new stocks, I would rather think that you link the trade in the derivative market to the size of the portfolio of the investor, because that's where probably you can measure the risk well. This way you can probably prevent the unwanted people to get into the market. So that is how I think it should be. But by way of putting in the higher market lot and creating a speed breaker kind of a situation on expressway is not going to help at all. And that's what I think my worry would be. I'm open for getting into any kind of new ideas as far as the improvement in the derivative market is concerned. But the fact is that the new stocks got added. I think don't create the preventive situation of not allowing people to trade into those stocks. I think that is what I would like to put across.
Devin sir, do help us understand on the FII flows front as well. We do know that there has been a consistent sell-off for the 33rd straight session as of yesterday. Over 1 lakh crores have been pulled out. Of course, it has met with an equal or more amount of money that's been poured in by the DIIs. But I want to understand, at what point does it become a red flag for the FIIs sell-off that we are seeing? Do you think there could be a point where the DIIs could also say that we are running out of this trend to continue to support the markets at the same time? And thirdly, any key trigger for which you could point out which will make the FIIs return to India?
Yeah, I'll try and attempt the last question first. Having sold significantly, it's probably the time that they would look at market little bit more favorably than otherwise. The larger part of the understanding is that the premium valuation at which they started selling into the market, they are justified. They may have any reason. They may have a reason of shifting money to China. They may have a reason to shift money back to the bonds. They may have a reason to shift money to American market, etc. Whatever other reasons that they may have, but I think they sold it at a premium valuation in Indian market. They are justified. We have been vocal about this subject that I think if the market continues to trade at a premium, we are going to invite the problem, and that's what I think they have taken the advantage of. If they are sustaining their sale for 30 days plus, it's unfortunate. Why unfortunate? Because I think our markets are shallow. If they want to take an exit, I think the exit can't be available to them, and that is why they're prolonging this sell. In any other part of the world, the kind of volume that they've sold would have been sold in days and not in months. That is also a fact. Unfortunate part is that it is getting spilled over to months, and that is what is creating the larger amount of pain in our market. That is causing larger amount of fall in stock price in our market. And nonetheless, I think that's a systemic flow that we are having in the markets. In my viewpoint, I think the chances of they returning back to India market would be higher now because the valuations have got corrected significantly. Some of the large cap companies, starting from likes of Reliance to some of the banks to some of the metal companies, finance companies, I would think that I think these companies have had a decent amount of fall. Even auto companies, they have had a decent amount of fall. 20-30% kind of a correction has happened. Valuation wise, they become attractive. It's a matter of time that I think they would start bringing the dollar back into the country. And that's where probably our market would start probably, I think, rallying also. That's what I gather. So maybe Indian investors are doing a smart job. In every fall they are buying, so that I think whenever these people re-enter into the market, they will get a chance to sell and make money for their investors as far as the mutual fund is concerned. So I appreciate the way in which I think the domestic investor is showing the maturity in bringing money in the falling market.
Right, 9, 10, ladies and gentlemen, it's not a bad start, Sakshi. All that pain is now sort of okayish, just 16 points down on the Nifty. Nifty 500, whatever it is worth, is trying to open in the green, 9 points higher. The Nifty Bank and the Nifty IT index down marginally, 34, 50 points, so to say. So let's hope that we have a nice dead cat bounce as far as markets are concerned. The initial phase of this bounce from 200 DMA may take the Nifty higher. Remember, tomorrow is a holiday. November 20th is a holiday. So you don't have much time if you are a put buyer to sort of let that premium not get extinguished. You will sell and you will book profit, and that might help the Nifty on its way up. 9:11, ladies and gentlemen, we are 4 minutes short on market open. Devan bhai, any view on L&T and Reliance, both of them below 200-day DMA? These have been quality stocks which buyers may want to add to their long-term portfolios. Is this a zone for a simple sip on a monthly basis in these two?
Yes, absolutely. I think for Reliance, the events unfolding in the coming months are likely to be the announcement of renewable businesses. I think the commercial start. That's where probably I think the larger amount of money has been invested, and that's what I think the market is wanting to see. The announcement pertaining to the geo platforms going into the public market, the listed market, in 2025 it is supposed to come into the public market. I think so that is what the announcement is likely to come up with. Announcement also likely to come up with on geo finance, I think where probably they have done significant amount of strategic tie-ups with the world leaders like BlackRock and others. So in my viewpoint, I think they are particularly going to have more amount of positive news coming up from Reliance's side. Fortunately, the Geo platform and the retail business, they are growing at a steady pace of growth. Geo platform is growing at a pace of growth of around 20%. Retail business is around 15 plus percent. Oil to chemical business, I think, which had a problem last quarter, I think we believe that I think this particular quarter the problem is to a greater extent taken care of. And the oil and gas exploration business per se, I think is showing 35-40% kind of a growth because of the higher production. So all in all put together, I believe that the Reliance is probably, I think, doing enough amount or giving enough amount of opportunity today by, I think, under this price correction. So certainly it is going to be an opportunity for investors.
Is an opportunity. What else would be an opportunity in this corrective market? 10% down on the benchmarks, over 11% cuts on the mid and the small caps. Any key stocks from all these segments that you have identified which now have started to look more attractive, sir?
Yes, I think we talked during the Diwali week. I think these 2-3 stocks, and one among them is Tata Technology. Second is Bajaj Housing Finance. Third one is Geo Finance. each of these companies, I think we were expecting a fall during the market fall. And I think the market has already favored us by way of giving this particular fall. So to a greater extent, they become the opportunity from investment perspective. Maybe I think we see things from the long-term point of view. So in the near term, if the stock prices further fall, it becomes an additional opportunity to add them into the portfolio.
Ladies and gentlemen, we are waiting for markets to open, and today is going to be a tough day for bears. I'm sort of sticking my neck out. I hope that happens. 2 days of 600-point fall, the weekly expiry of the Nifty, of the Sensex 500, my apologies, Sensex 50, as also a host of selling pressure that needs to be squared up for the profit to move into your bank accounts. That's the only hope, at least I have. And we've been tracking the 23,500 Nifty call expiring November 21st at 242 rupees. It shut shop at 270. Let's see how it goes. But here are the rates right there in front of you in terms of earnings. We are looking at National Aluminium, Garden Reach and Eicher Motors. They came up with a good set of numbers, but let's start with the markets. And the Nifty is off to a green start, 50 points higher, 23,621. Okay, now what is bringing this green tick? ICICI Bank and Axis Bank in strength, 8 rupees higher, 750 higher. The Nifty Bank 285 points higher. The IT index 97, 100 points higher. The Nifty 500 is off to a roaring start, 100 points higher on the Nifty 500, 22,025. Okay, Bajaj Finance is up 57 rupees. You have Kotak Bank 10 rupees higher. Reliance in the green 5.5 rupees higher. ITC below 200 DMA now, 0.5 50 paisa lower. SBI in the green, Tata Motors in the green. A quick look at earnings, boys. Okay, we have Eicher Motors 6.5% higher. National Aluminium 3.3% higher. Garden Reach Shipbuilders 4.5% higher. These were the earnings guys in the markets. Let's look at the broader issue as far as advanced decline is concerned. Sakshi, all 19 indices are in the green. A very strong advanced decline number. 1332 shares on the NSE are in the green, almost 600 in the red. So it's an easy 2:1, which is the top gaining index, the small cap 100, up 1 percentage points. The mid cap 100, 0.5% higher, and the advanced decline ratio in the NSE 500 is a fabulous 434:64. I'll very quickly mark the options call that we've been tracking. I think it is time to bid it goodbye, but let us see what it is trading at. We are looking at November 21, 23,500 option call, now at trading at 262 rupees. Am I right? Maybe yes. This is the price at least that I get. Let's see how the market progresses from now on. Sakshi, what are you watching?
MCX gold, which has slipped 600 rupees per 10 grams, Shail. After those record high levels that we've been tracking on the commodities front, both the gold and silver are now cooling off from their record levels. Gold is trading at 73,841 rupees per 10 grams. What we've also seen is 1,200 rupees a kilo drop is being seen on silver as well. So we'll continue to keep an eye out on how much more cool off. We'll continue to keep prices lower now on gold and silver, and more attractive for all the investors to buy right ahead of the wedding season as well. So keep an eye out on that space as well. But it's the small caps that are now rallying 1.2% higher in trade. Remember, this has been beaten black and blue. Both the mid and the small caps, especially small caps, is now one of the top performing indices. 0.9% higher right now for this one. Let's look at the slew of stocks that are actually performing here. You have stocks like Garden Reach Builders, that's up 4.2%, Nalco, that's up 3.3%, you have Natco Pharma up 3%, CAMS, that's also up by 3%, Aadhar Housing Finance, ITI, First Solutions, 361 WAM, CDSL, a lot of these capital markets related stocks that are buzzing in the small caps basket. Swan Energy, that's up by 4.2% as well. Realty, remember this was also battered in yesterday's trade, and that is seeing some recovery. Macrotech up 3%. High-end trade. But let's look at Swiggy. That will be important to watch out for that one because it debuted yesterday, 6.3% higher at 485. That's the level. Okay, 4.3% now, 476 right now coming in for Swiggy on this screens. Let's also look at Zomato in the same breath to see how these two stocks will be now tracked together. Almost on a frequent basis, 1.7% higher for Zomato as well, 263 right now. It's a stellar move that's coming in for Swiggy on day 2 as well. Apart from this, there are several stocks that are buzzing in the broader markets today. Let's look at Maharashtra Scooters, that's up 4.3%. In the broader markets, you have McLeod Russell, that's up 5% in trade. Then you also have stocks like Sky Gold from the jewelry space, that's up 5%. Ami Organics is up by 6% in trade. Lumax Auto, that's also up by 8% in trade as well. So these are some of the stocks that are actually buzzing in the broader market scenario as well. We are awaiting Vineet Bolinshkar to join in to help us understand which way is he really looking at into the markets. But there are several other pockets. Let's also look at F&O. Eicher Motors, the top mover right there, post earnings, 7% higher in the F&O space for Eicher Motors. Then you have Nalco again, post strong set of numbers that are coming in, 6.8% higher. For this one. You have Apollo Tyres, that's also buzzing strongly. This is also after the earnings. Remember, this Gurugram based company has reported a 37% year on year decline in the net profit, and that's despite that you're seeing Apollo Tyres buzz in the F&O space. It has, however, reported the kind of revenue from operations that have increased by 8.7% to 2,003 odd crore rupees. Let's look at Balkrishna Industries. Again, so the tire space is also buzzing. You have 2 or 3 names that are actually looking up within this space. Let's also look at some of the other tire majors right there. SEAT, for instance, to see whether the buzz is across the space as well. Entire tire space could be really looked at. Samvardhan Motherson, second day in a row post earnings, it continues to move up in the F&O space as well. What is not doing well right now? The Nifty is turned flat, viewers. 23,563 right now for the Nifty. What's not doing well is Power Grid, 2% lower. BPCL, Ultratech Cement, BEL, M&M and Shriram Finance are the top losers on the Nifty right now. The PSU index has slipped lower, 0.6%. Oil and gas and the infra space, these are the spaces which are actually looking dicey on the D Street right now, but it's the media stocks that are actually looking very well. All right, so that's as far as the market setup is concerned. Eicher Motors, it's surprising everybody, 4,903 share.
Right, ladies and gentlemen, 922 for us. It's a fairly okayish start. Let's look at the accidents that have happened in the market and how they are being bought into. Asian Paints, 1.1% higher. This is now building a base probably, but only time will tell how this will move. Remember, the earnings were disastrous on the volume front, on the margin front, as also there was a pain point when it came to the sales and profitability as well. Breakdowns happening in Hindustan Unilever. The number that you see, 2445, is now the lowest since 4th of June when earnings came in. What else is not working? Garden Reach now 2.75% higher. There is selling pressure that is getting higher on bearing maker SKF India. We generally don't discuss this one, but now huge breakdowns happening. SKF India is now lowest since May 9th. Look at stocks which are gaining ground. In them, Banco India 15% higher, 806. I think this will be a record high, yes. And the company's announced a bonus issue, so please keep that in mind. Midhani is up 7.8%. We have Thomas Cook 5% higher, 201. And we have Camlin Fine 5.5% higher. We are waiting for Mr. Vineet Bojlinkar to join us, and then we will. Namaste, Vineet ji. Any comment that you will have on the markets as of now? What is the percentage of cash that you are sitting on at the moment in your portfolio, and what is your research team doing?
I think I think the market might form a intermediate bottom because it's taking support from the 200 DMA and as well as the downward sloping channel. But what I think is that it's going to be a throwback rally, a bounce back, and we'll build on this rally from here. So from here, while we have been quite negative on the markets, we think that here some kind of bottom fishing will happen. So you are going to get a few trades that will play out. The stocks to invest or the sectors that we like are going to be diagnostics. We like the data AI space, and of course the defense space, because you can see that the 2% of spending by each country will mean a lot of bonanza for Indian players, because now Indian players are exporting to more than 190 countries. So I think it's a very these are the few sectors which I think will rally strongly in the markets.
Morning to you, Vineet. Good to hear from you. As far as how you believe that the markets could be building up from here, that's a sigh of relief that all the viewers and investors must be waiting for. Three spaces starting with D is what you've mentioned: diagnostics, data, AI and defense. Let's come to defense. Do you think after this 20, 30, 40, even 50% correction at some stages, this is the best time to start going full throttle on the defense space, or should one stick with the SIP strategy coming in maybe on index fund level as well? How would you really advise investors to really look at defense space, because this has been the most pain point for investors over the last 45 days odd kind of a sell-off?
So rather than playing the visible names directly, I think there are some very good stocks that we can look at.
Okay.
One is Lokesh Machines, which is going to be a pistol small arms manufacturer. The other stocks that come to mind is Deepak Nitride, because ammonia and TNT is going to be a very important, ammonium nitrate, a very important part of, rather a consumable from the defense ecosystem. Himachal Futuristics has corrected very handsomely. It's off 25% from the highs. So that stock looks very attractive. We're going to see a lot of defense news come in, flow from here. So these are some of the names that we like, and the conventional names are all very, very expensive. So I think these three names that I mentioned to you seem better valued and have got good valuation upside.
Okay. Vineet, there was this thought process that IT and private banks would hold the Nifty. Private banks in particular, this inflation number of 6.1%, do you think the rate cut is now maybe off the table, or is this just a temporary phenomena as far as food inflation is concerned, the largest component, and maybe this is an opportunity to get back into frontline corporate banks like Axis and ICICI? How do you see this space?
So, my take is that, world wars are not fought on the battlefield anymore. Rather, they are part of the election rhetoric. And food has been weaponized. So we should look to see whether the food inflation falls off after the November elections. If that were to happen, then RBI might not raise the rates and may hold them there. But otherwise, it's a 50-50 chance that RBI raises the rates or holds them.
Okay. Vineet, I also wanted to get a sense on Swiggy versus Zomato. How are you really looking at the food delivery space right now? What is becoming your new favorite?
So Swiggy, we have a price target of 460 where we have high conviction, and if Swiggy pulls off a number of levers which are there at their where they can easily do a lot of cost cutting and restore part to profitability, then I think we can see even targets of 510 on the upside. Uh, Over there, what happens is we are forecasting 2 years out, and hence, beyond 510, 525, the stock will get a little bit expensive. So, I've spoken to you earlier about Zomato, 270 being the fair value. We've seen the stock struggle to go beyond 270. So I think, both these stocks are now at somewhat near to or a little away from fair valuations.
Vineet, are you rubbing your hands with glee when you look at these new additions that are happening in the FNO space? Some very lofty valuations which now can be sort of corrected with tactical shorts in the future segment, maybe DMART, maybe PB Fintech, maybe BSE. There is an example where Whirlpool came into the FNO space at 2900 and exited at 1200. How do you see this addition of 45 stocks in the FNO space, especially the new age ones where PEs are still very, very high?
So, it's welcome. The price discovery gets more transparent. And if you have a negative view on a stock, you can actually play it out. So to that extent, addition of newer stocks is most welcome.
Okay. A lot of Adani stocks have come in this space as well. Is this something that bears will rub their hands with glee?
I think the bears will get trapped.
Okay.
Okay. I take your point.
Okay, understood. Well, since we are talking about the IPO space, Vineet, do tell us how are you really looking at this opportunity of NTPC Green now coming in for investors? For NTPC shareholders, of course, there is an opportunity extra. What would your advice be after reading the note?
So we are quite bullish on NTPC Green. Actually, NTPC plus NTPC Green in favor of NTPC are looking at a price of 500. And so that value unlocking we will see happening in the markets. Uh, Apart from that, I think once NTPC gets listed, NTPC might come in for a little bit of sideways to downward trend, because now the entire savvy part of the portfolio, which is, which appeals to the market, is now with NTPC Green. And NTPC Green will be the new bridegroom on the streets, given the fact that, it is going to go from 3,000 megawatts to about 60,000 megawatts in the next 7 years. So you're going to 20x your portfolio, and that kind of ramp up, if NTPC Green is able to, build out in that period of time, I think massive value creation will be done out here, and hence very bullish on this counter.
Okay, that's the view coming in as far as NTPC Green is concerned.
So Shail, just
And
to
remember, ladies and
talk
gentlemen, for
about,
all those who hold the stock of, yeah, please.
so a stock that comes to mind on the back of NTPC, which is going into the futures market, is NHPC. And I think, if you want to leverage your money and buy something which is extremely cheap, and you want to hold for a little time and roll your holdings, I think NHPC can be a multi-bagger if you were to buy it in the FNO instead of the uh, cash markets.
You mean to say roll the contract?
Yeah, matlab, if you have a view of 1 year out, or possibly little longer period of time, I think at the margin you can make massive amounts of money.
Okay, that's very interesting. Maybe we'll do a separate show on this one with you. You essentially mean that by the NHPC future, the moment it is lifted, and keep on rolling it, which means either collecting the profit at the end of the next expiry, or making the M2M payment if the stock future is lower over the next 12 months. Am I right?
Yeah, so I'll give you a little fundamental sense around that. If the stock is at about 2000 megawatts of capacity, and it's going to ramp up capacities very aggressively from next year onwards. Today it's available at a reasonable dividend yield, and if you're looking at a multi-bagger which is going to play out, okay, because by 2032 they are going to go to 17 gigawatts, from 2000 gigawatts. So they're going to ramp up their portfolio almost 8x, and hence, uh, it looks very juicy. So our target for this stock, uh, you know, 12 months to 18 months out is about 170, and it's a veritable green energy source, hydroelectricity. And our calculations are considering that the water that percolates into the basin is far lower than even the worst time period. So it's a very conservative price target.
Okay. Wonderful.
Okay, interesting.
We'll keep an eye.
At this moment, the dividend yield on NHPC is 2.35%, ladies and gentlemen, which is fairly decent. And we've seen an all-time high of somewhere like 120 on the counter, which was somewhere in 15th of July. And at the moment, NHPC is available at multi-month lows. This time you saw the price was March 2024. So if you are risk averse like I am, and you believe in Vineet stock picking, which you should, this could be an opportunity to maybe buy the counter in your long term portfolio and add it. In the same breath, again, thank you, Vineet. I look at Markson's Pharma every day. The counter is going to make a record high today. In fact, it has because you are present. 325 was the intraday high. And again, thanks for this one.
So, okay, we'll keep an eye out on this Markson's Pharma. We'll keep an eye out on NHPC as well as some other stocks like Lokesh Machines, Deepak Nitrite and HFCL as have been highlighted by Vineet on that front too. Let's at least understand as far as the mid and the small cap space is concerned now, Vineet. Within these pockets, are you finding any interesting names, a key pocket or a sector which is really, looking for attention from investors with good valuations now coming in?
So I think one should look at the shipping sector.
Shipping.
It's the new price boy of the government. And the kind of policy play that could pan out here, I believe that you could have a massive multi-year bull market playing out in this segment. Here, Swan Energy looks to be a very good play. In addition to that, SR Shipping, and there is a company called Marine Engineering, which is a proxy play on the shipping industry, the radars, as well as green energy. Okay, and having huge inputs to the data center space. So these two stocks come to mind. These three odd stocks come to mind when we think of shipping.
Got it. So those are the three.
Which was the first one you mentioned? Vineet, I'm just writing this in my blue pad that you've named. I got Marine Engineering.
I told you about SR Shipping.
Swan Energy
and Swan Energy. See,
Okay.
Swan Energy is one of the largest docks in the country,
Okay.
and we think it will be a very big beneficiary of the government policy because currently all shipyards are full.
Fair point. So today's entry on 14th of November is four stocks: NHPC, Lokesh Machines, Marine Engineering, Swan Energy, and SR Shipping.
And speaking of 14 November, it is also Children's Day. So it's a gift.
Yes. So it's a gift to all the children out there, the students of
Yes,
investments
the
in stock
students of
market.
investing.
Wonderful.
Let me just name a couple of stocks. I look at Paytm, and Paytm at the moment is somewhere like 776. On 1st of October, Paytm was recommended at 688 by Vineet. And ladies and gentlemen, it's a carnage that has happened from 1st October to 11th November, and a stock is 100 rupees higher from that level. So that gives you the quality of stock picking that Vineet does. We have Arvind Fashion at 587 recommended, Quest Corp at 794, Marksons at 238, and V2 Retail at 1114. My bookkeeping, Vineet, you must appreciate publicly.
Yes, I appreciate your blue book completely. And I trust that the contents are absolutely verbatim of what your guests are recommending.
Yes.
Absolutely. I note down the date and the price at which you recommend or anybody else recommends. And I also make it a point to share a photograph of their stock picks with them.
It's amazing. So, Vineet, from those earlier recommendations that Shail just read out, Paytm, Arvind Fashions, Quest Corp, Marksons, V2 Retail, where would you advise investors to continue to do that SIP?
A Paytm, V2 Retail, with high conviction, you can sip those counters.
Okay, got that. So we have, about 10 stocks, viewers, from Vineet's portfolio right there as a Children's Day gift to all of you who have been reading the markets, investing. So these are the lessons that are being parted, and of course those 10 key stocks that we have discussed today that you should definitely note down, just like how Shail has, and keep in your research radar and keep investing in all of these along with your own financial advisors advice too for your own invested portfolio. Let's look at the markets again. Flat trade 23,580 right now. Vineet, would you rule out a bear market condition on the benchmarks? We are down 10%, but is that something that will come in, or is that a ruled out scenario right now?
No, it's not ruled out at all. Notably because there's a lot going to play out in the US economy. And there is a lot of uh, pros and cons around what Trump has stated. So if he's not successful in doing what he's doing, or if he announces the plans that he is going to raise, you're going to see inflation go up in the US. You're going to see glut in global economy because of the tariffs, and that does not bode well for the margins and volume growth of export oriented economies and stocks. That can pressure the currency, raise inflation, and consequently the interest rates. And we're already struggling with, despite having everything good going for us, we are really struggling with the inflation conundrum. So it's not going to be a cakewalk in 2025, and you could see further dips come in. uh, as we go and speak, I'm coming across a large number of stocks which are very marquee names, which look overvalued by as much as 50%.
Oh.
So, I still think that there's a substantial fraud that needs to be liquidated. And until that does not happen, it is going to be difficult for the markets to come by and rally.
That's true, actually. We somehow presume that once the 200-day DMA has been tested, things will improve for the better. But even on this day, you see how the US 10-year yield and in particular the dollar index is behaving. And this is when rate cuts have happened in the US to the extent of 75 basis points. Another one is expected, whose probability increased yesterday. So, Vineet, if you can just explain to our viewers as to why you have this strength in the dollar and the US 10-year yield appreciating to maybe 8-10 month highs, the dollar index at a 13-month high, despite the rate cut by the US Federal Reserve.
So, if you look at, there are four large economic blocks, if I may call it. So, you have the US block, you have Europe, you have China, and you have India. Okay. US has got its own problems. Europe, after, they have to fend for themselves in terms of defense. They have to spend 2% and they have to uh, compromise between development agenda and defense, and they've chosen in favor of defense. So growth is going to plateau in Europe. Japan, if you see in Asia, is is a geriatrian problem they have, geriatrics problem. China, no matter what they do, no matter what kind of stimulus they give, nobody is going to come and buy housing units because it is oversupplied, and people in China know that there is no appreciation. So that is a wasted effort on my thinking. If you come to India, we've seen a massive bull run play out. Valuations are expensive, and now we are correcting out there. So if you take all these factors which are there, you're not going to really get any traction going. And especially if you talk about the US, so the US market has held up very well despite that. So all these things that are happening, what is really happening is that there is really no option left to but go and invest in the US dollar. And after Trump's statement on the global war scenes in Israel and Ukraine, a little bit of sanity is restored with respect to the dollar not being weaponized anymore, right? And it is the default currency or the reserve trade or whatever you call it, because there is no available alternative to that where you can repose faith. So you cannot buy a yuan, you cannot buy a ruble. Euro is going nowhere. It's only euro is absolutely a isotope of the US dollar. So we are seeing the strength in the dollar and the dollar remaining firm, while all the other economies are tending to find their feet.
Point very well taken right there. Thanks a lot, Vineet, for helping us understand what's really playing out right there as key factors for us to continue to monitor. Markets back into the green after that blip, 23,590 right now. It's been very, very volatile since the opening, and it's half an hour done from the morning trade thus far. But just like how Vineet says that we are going to be seeing more volatility throughout the new year as well, and there are several of these factors that will be at play, so one needs to be very, very cautious at this point in time. FMCG, oil and gas, auto and infra have now slipped into the red. What remains into the green is the media stocks that are up 1.2%, the Nifty bank that's up 0.6%, financial services, private banks are also holding up. So is IT and the broader markets. Metals and realty also pulling back from yesterday's sharp losses right there. Vinny, just to understand, since you're talking about the US, the dollar index, the yield, and how things are playing out, how are some of the export-oriented sectors really looking to you, both IT and pharma, and how are you really looking at the large versus the mid caps there?
So, pharma has IT has really outperformed given the rupee weakening vis-a-vis the dollar. as far as pharma is concerned, I think there is more confidence in pharma given the fact that, there are severe shortages in the US economy as far as generics are concerned. And on the new drug delivery, there's a lot of emphasis given to CDMO, where there are a large number of Indian players to whom, research is outsourced. So the CDMO space, the generic space, and specifically India-oriented pharmaceutical players look to be in a sweet spot. Among them, we like Natco Pharma because of its new drug discovery. In terms of CDMO, we like Piramal Pharma because it's cheap. And the third stock that we like is Eris Life Sciences, pure domestic play, high margins, ability to absorb, acquire new businesses, and retain their high 35% margins with market dominance. So these are some of the plays that I would prefer to have. As far as IT is concerned, here we like a stock called 63 Moons, because in that all the negatives that are there have played out. And if NSCL gets settled, that's a feather in its cap, because the regulatory hangover goes through, and they have significant ability to develop game-changing solutions. So if you want to understand, MCX was a game-changing solution. It's one of the largest commodity exchange in the globally today. If you look at Odin, which is a trading platform for NSE and BSE, and traders and brokers would acknowledge the prowess of Odin. And so they have proven technologies in the exchange space, and it is possible that they could be setting up a Bitcoin exchange in the Middle East. So keeping all these things in mind and data center activities that they're getting into, I think it looks very good. And one of its subsidiaries is raising money at 3,000 crores valuation. So if that kind of money is coming into the company, I think there's a lot of value to be made. Apart from this, you have to be very, very specific and selective, because, in US, what is going to happen is that AI is going to become pretty dominant, because, they have challenges with labor and illegals. In India, every company has set up a GCC. So the Indian listed IT service providers are competing not only against automation, but also against GCCs being set up. So their growth is going to come into question. And today, if they are going to go and use the excess cash to go and buy businesses, these stocks are going to come in for a hammering, because only the sweet spot for buying these stocks is that you get healthy buybacks.
Fair point. So I'll also add my apologies, 63 Moons to the list of stocks that you've recommended today. 9:51 Vineet, we have 9 minutes for the show to go, and so far the index has held its green texture, although it's come off fairly substantially from whatever little high that it made early morning. What else is happening in the market? Let's look at some volume buzzers that are there. Okay, Aisha Motors 7% higher, 49.15. This is both pent up demand as also short covering. Remember, 2.3 times the 5-day average has been traded. We have Geo Finance 4 percentage points higher. In fact, a lot of stocks that are now going to be a part of the FNO space are showing signs of strength. Look at CDSL, look at Geo Finance. These are the names that come in immediately. What are the Adani set of stocks doing? Adani Energy Solutions is up 0.3%. You have also any other gainers that I would like to point out. Adani Wilmar 1.2% higher, Adani Green 1% higher, so it's fairly okayish. So far it's the banks that are holding the Nifty up. Bank index up 300 points at 50,400. HDFC Bank, ICICI Bank contributing 23 and 13 points to Nifty's gains. Kotak and Axis 4 points each. So that is how it is, ladies and gentlemen, as far as markets are concerned. In the first half an hour of trade on the weekly expiry of the Nifty, as also a very long weekend, the index is in positive territory. Let us see how the rest of the day pans out. Vineet, any space or any stock that you would recommend in the cement sector now that the monsoon is over, second quarter is out of the way, and probably construction will take an upswing?
So, there's one tiny little cement company in Gujarat called Saurashtra Cement. I believe that the company could be in play given the fact that, there is consolidation happening in the sector. Even if you were to consider $80 EV per ton as a fair value for the stock, you're looking at a veritable 50% upside from current levels. So it's a very cheap stock, can be accumulated, buy and forget, because sooner or later, all these stocks are going to be picked up. It's a profitable company. And generally, I am not very keen on the cement pack as a whole because we've seen them struggle a lot with margins. And, capacity has been keeping abreast of demand. And, they continue to be at this thing, under pressure. But the only thing that I can think of is that, there are 3 to 4 large players which will emerge. Adani, Ambuja, Ultratech, Dalmia Bharat, and Shree Cement. These are the 4, and there may be a few smaller players which will still be around. Considering this, I believe that pricing may be a weapon that might be used by these large players to keep valuations under check for the smaller players so that they can pressurize them to gobble them up.
Fair enough. So we'll keep an eye out on Saurashtra Cement and the entire cement space as well. Right there, 9:55. We haven't discussed the auto space at all with you. Vineet, how have you looked at the earnings for Aisha, and what have you assessed with the kind of sales that have come in? Of course, muted festive demand was something that most of the managements had highlighted. But going forward from here, how are you looking at the auto space?
I think we have seen some very accelerated growth play out in most of the companies. And now that growth is restoring back to a more toned down mean level of growth. That is not to say that the growth story is over. It is just that the growth is getting now more mature. So, we'll have 6 to 7% kind of volume growth aping the GDP growth. And we'll have ASP increases because there's a flair for fancy vehicles, and higher price vehicles are moving up as the development of the value chain happens of the individual user. So given that, I think I don't find any stock attractive at these levels except for Maruti. But Maruti is also facing its own volume issues. So right now, not going with any bias out here.
$9.56, ladies and gentlemen. The Nifty is showing signs of life. It's above 23,600 for a change, up 44 points. And I'd like to point out Banco. This is now up 17.1%, 818. Of course, a record high. And that's because they've recommended a 1:1 bonus for existing shareholders, and this is something one should look at. Let me just give you the profit numbers at Banco. They've done phenomenally well. Net profit is up 110% for the second quarter at 139 crore rupees versus 66 crores a year ago. Sales have gone up 24% to 895 crores versus 725. This counter is available even at this price at a modest PE of 17, and you have a dividend yield of 2.4%. Market capitalization 5,800 crores. Vineet, do you track Banco?
No, we don't track Banco. Sorry.
No worries. The stock at a record high, and of course showing a very strong volume pull. 63 crores worth of shares have been traded, and this is after a 5-6 day fall. So a nice swing trade in the making as far as bank was concerned. What else is in the green? Thomas Cook 6% higher, 202. Remember, the not only does the tourist season begin, but it's also the wedding season where a lot of hotels will be filled up. Thomas Cook is right there in the middle of that business. Thyrocare 4.5% higher, 988. Suzlon recovering 5% higher at a circuit, and of course Edelweiss 6% higher, 108. So that's how it is, ladies and gentlemen, as far as the markets are concerned at 9:58.
Okay, got it. Well, we will thank you, Vineet, on that note for being with us on this special edition to share with us all those insights and key stocks that you've suggested to all our viewers. And I'm sure Shail will continue to mark them out in various shows from his blue book for all our viewers continuously. Thank you so much. Always appreciate your time with us and hope you have a fantastic time till the time we meet you next. And we hope the markets find some base and are northward bound when we see you next on air. 23,598. We're now inching closer to that 23,600 mark right now. But viewers, we will also be shifting focus to Niva Bupa Healthcare listing as well. Remember, what we have seen is for Niva Bupa, you can see the kind of visuals that are already coming in on your screens for this one. Already the GMP or the grey market premium was looking subdued, but let's see how the listing really happens on that front. What we have seen for Niva Bupa is that the issue price was 74 rupees. It's just about 5-4 seconds to go right there, and this IPO was subscribed by 1.8 times. Let's see what the number has really come in for Niva Bupa. Do you have the number right there in front of you, Shail? I'm not getting it for some reason.
Yes, 80 rupees at 8% premium to the offer price of 74. This is what Bupa has listed at, and let us see how long this continues. Let's just dip into the financials that we have in front of us. The IPO was worth about 2,200 crore rupees, of which the offer for sale was 1,400, fresh issue was 800, and the money was raised for investments towards maintaining the solvency ratio. Market cap at this point of time is 14,000 crore rupees on the listing price of about 80 rupees, which is a 6.5% premium to its offer price of 74. This is also the right time to look at Swiggy. Early morning highs have been sold into. You have 2.7% lower at 443. Acme Solar, that got listed yesterday at a discount of 13%, is still down, and Sagility, the recently listed IPO, is still below offer price, although up 1.9%. Afcons is 2.5% higher around its issue price, again 481, and of course Hyundai down 0.3%, Vari Energy up 2%. These are the 5-7 IPOs that got listed in the last 10-11 working sessions. Sakshi, let's wrap it.
Yes, good point to wrap it up at that. About 90 points higher in trade for the Nifty. We are now at 23,650. Let's hope it only builds on from here as we inch closer to the closing of the day, and it will be a great way to end this truncated week. We've had 5 straight days of sell-off. If we end in the green, that would definitely give a lot of hope to all the investors who may be looking at an extended weekend with a breath of relief right there. We'll leave you at that, viewers, on this morning edition of Market Today, but do stay tuned. There's a lot more lined up for you throughout the course of the day, including earnings interactions, the IPO space that you should be really looking at. Lots more will be coming up, so stay tuned. There's a lot of action to be unfolded on your screens.
Hello and welcome to BT's edition for Most Powerful Women. Today we have here with us Ritu Arora, who is the CEO and CIO Allianz Investment Management Asia Pacific. Hello, ma'am.
Hello.
Congratulations on winning the award for the most powerful woman.
Thank you. It's a privilege.
Ma'am, I want to start by asking you that what is your overall outlook on the Indian economy with India emerging as one of the biggest markets for the world?
Absolutely. Very, very positive. Allianz remains strategically very committed to India. And India definitely stands out with very positive, strong growth in the world, strong demographics, strong markets, strong institutions. So it is definitely a country and an economy